Hi, welcome to this video, date which is on the 23rd of September. It's Wednesday. Just going to give our updated outlook and forecast for the USD. Today, going to be looking at several US dollar pairs. We'll go over the charts in a moment. Now, in terms of the last weekly FX forecast we did, we said we felt the dollar was about to confirm a major trend reversal to the upside. I think it's doing that right now. The profit potential in USD pairs looks really good. Now, in terms of this video, I'll obviously be reviewing US dollar pairs, but I also want to give some tips in terms of catching and holding big trends. Most traders either bank out too early or put their stop too close. So you really do need to catch those really big trends, 300, 500 pips or more to cover your inevitable losses. Just want to go through some tips in relation to holding big trends and getting as much as you can from them. Now, in terms of going to the charts, let's do that right now. But just before we do so, please do keep in mind, it is my view as of this specific moment in time. It can obviously change in line with the market conditions and action. If you want all our trading techniques, our daily technical sentiment analysis of 14 FX pairs, just click on the link beneath this video and you get live access to our member center. You can also follow us on Facebook and join our Facebook group of traders. Now I'm just doing my evening analysis for the members center, so I'm just going to use the charts from there. So let's go and take a look at them. Just in our member center, and just go down to the first pair we're going to look at, which is Euro USD. Now, in terms of you're new to our videos, basically our technicals are very simple. We mostly use big support and resistance levels, but in terms of before we do the technicals, we're always going to have a directional bias first from the sentiment of traders. That's what allows us to keep the technicals simple. Now, in terms of if you know where the big money is sitting, the sentiment of the market, you can get advance warning of trend reversals and also measure how far a trend might go, which you can't do just from pure technicals alone. Now, in terms of our favorite sentiment tool, it's COT Net Traders Positions. Totally free. It comes from the CFTC. If you want to learn more about it, just look up our video called COT Net Traders Indicator on our channel. Okay, we will do our own sentiment analysis as well in terms of studying banks and big institutions and working out what their view is and assuming their positions. Okay, so we're always looking for the sentiment first, and then we'll have a directional bias and we'll do our technicals. Now, in terms of the euro, just go through the chart. We do come up strongly here from the 108 level. We base out into 112 and then we push off to the upside. Okay. Now, in terms of when we get up here, where my cursor is, speculators move to a 2-year high in terms of long positions. Okay, so they're heavily long. The commercial smart money goes short against them. This is on the COT. So we're assuming there isn't too much upside, but you get a kind of consolidation period where we come down to support, briefly through resistance, down, up to resistance. But now we've broken the support level. Okay, so we're below 118. Now I think 118 is going to hold rallies. Now, at the minute we've only got 100 pips or so in profit. You can see our position there, 117.70, but there could be 500 pips more if we get down to 112. And I've measured this level from just our experience of the COT Net Traders positions. Speculators are so long, points to move down to here. Rallies should be capped by around the 118 level. Now, at the moment, the stop is 119.30 back here. But if we move through the low, I'll tuck the stop in back behind 118. Now, in terms of the euro, she could rally back to 118. Okay, it's an obvious level. Okay, so I don't want my stop right behind 118. I want it back from the level. So I'm going to be probably when I move it in the AM update tomorrow, I'll probably be 118.80. Okay, I think a lot of traders just too keen to move their stops too quickly. You've got to stay out the way of the noise in the market and also the big institutions who are often very often run price up to a big level to take out retail stops. Okay, So yeah, I think the euro could be a really nice move to the downside. Upside is limited in our view, and yeah, hopefully going down. Let's move to our next pair, which is going to be GBP USD. Right, GBP USD, and this has been a bit of a lucky trade for us. I thought the pound would go down, but not as quickly as it has. We've got a nice entry, 133.30, and yeah, at the current market price, basically 600 pips up. Now, in terms of another way, dealing with big trends, I still think there's another couple of hundred pips to go, but 600 pips is a really good profit. So what I will do when I write my PM update and notes, I'm going to take half out, okay, and let the other half run. My stop is quite wide at the moment, 130.40. I'm going to bring it in behind the 129 level. We could gravitate up there, okay, but I don't think we'll take out the level. I'm going to put it at 129.50. So when you've got enough profit, take half away. It just relieves the stress, so to speak, and then just run the other half. I'm hoping we're going to get the extra 200 pips. If I was coming into this fresh, I wouldn't just sell and look for 125, wait for the bounce, okay? In terms of a pair that I think is just confirming a major trend reversal, it's the AUD against the USD. And in terms of AUD, or the AUD, massive move from the March lows, about 30% to the upside. Now, in terms of the Aussie dollar, speculators are pretty heavily long, but when we come up here, yeah, obviously we make a new daily high at the time, then we struggle, then we fall, then you just get low volatility candles, okay? When the volatility drops down, you get really small candles. Yeah, I'd take that in this instance as exhaustion of the bulls. And now we've penetrated this level here, which is a support level, out of a very narrow range, and we're off to the downside, okay? I think that's it for the Aussie. We're going down to 65. We may go lower, but it's 600 pips to 65. Now, in terms of the Aussie dollar, it was really supported on the way up by commodity prices. And the commodity that is important for Australia is iron ore. And you should keep your eye on iron ore if you're trading the Aussie, in my view. Look at this for a rise here. It's 57%, isn't it? That's more than gold. I think it's the top performing metal. And now we're rolling over to the downside. Now we know that this rally up was very much driven by speculative money. Speculators heavily long, and now we think they're going to get taken out on stop. The whole rally will be retraced, okay? And lower iron ore prices will pressure the Aussie. Over here, you can't see the whole chart, but it was a big rally up, and then we had a free fall. Okay, that's speculators just getting flushed out the market. I think the same will happen again. The Aussie will be pressured lower. So I think this is a trend reversal being confirmed. We were a little bit early, coming in at 72.70, so just under 200 pips in profit. But I am adding to this one tonight. Okay, so yeah, I think this one looks really good. The Aussie hasn't treated us kindly with our trading over the last few months, but I think now could get a really good move out of it. Also, other commodities you should keep an eye on. Australia exports like copper, for example. Copper's having a bad day today, and there's other commodities like coal, etc. But commodities peaking out, pressure the Aussie lower, and going down to 65. Right, USD JPY. Now, in terms of this pair, we are doing a swing trade long. Actually, long term, we're bearish of the USD or the JPY, but in the short term, speculators on the COTNet traders report are heavily short, okay? And commercial smart money is long. So we're looking at a swing trade to go up to 108. We're in at 104.80, okay? But in terms of this trade, we come down, we bounce from a round number here. Tail goes through that tail. Then we come back. Now we're working our way higher. Now I'm going to be watching this trade closely because I'm looking for the dollar to really start following through, okay? If it stalls into, let's say, 106 or stalls around where it is, I might just take it out, okay? The one thing with this pair is obviously we went big risk off, then the yen would appreciate on the dollar. The way I see it at the moment, though, the dollar should go up on the yen. So it's a nice blue candle. We'll see what happens tomorrow with this pair. Now, in terms of next pair, it's going to be USD CAD. This is kind of a similar one to the AUD in terms of both commodity exporting nations, and dollar had a big fall. We get in long, okay, this blue. Then look at it, choppy sideways action. You can hardly see the candles here on my cursor is. Then we get the big blue breakout. That's it. That's confirming a big move for us. Just through the high, we could buy off this level of support. I think we could go all the way up to 140. So yeah, in terms of the CAD and the Aussie, similar kind of backdrop. Now, let's go look at a few more majors and some minor pairs that I think just look excellent risk to reward trades. Right, the pair we're on now is USD CHF, and I'm extremely bullish of this pair, and I think it's confirming a trend reversal to the upside. Now, in relation to this pair, I did a video a couple of weeks ago and thought the USD would break higher, and it just didn't do much at all. It just kind of went up, down, up, down. Now it's broken out above resistance. 4 nice blues, up to 96, then possibly up to 98. Why are we so bullish? COT Net Traders report shows speculators have a 10-year high in terms of short positions. Okay, and commercial smart money is heavily long. It's a big extreme. Points to move to 96, possibly even 98. And when you use COT, you do get used to measuring how far trends might run in relation to how the groups are positioned. And I think, when people trade purely technically, it's easily done to take your eye off the big target and want to get out too early or move your stop too soon. Now, in terms of if we do get up to 96, decent risk reward. Stop is back here at the moment. Obviously, if we get up to 98, it's even better. I think if the USD did go down a bit, it would be a buying opportunity of this level here. Going higher. Only got 100 pips out of it so far. We've sat on it for a little while, but could hopefully get 400 to 600 more out of it. We shall see. Next pair is a minor pair. It's been a favourite of mine for a while. It's US dollar against the Turkish lira. And in terms of this pair, okay, it is a fast-moving, volatile pair. Not many traders focus on the minor pairs or the exotics, but I think, they can very often give you your best trades. They're so volatile they can trend very well. And this one's done really nicely since we got interested when it broke up here. Moves off and it's kept going. 2 trades in it. One, banked for a nice profit, and the one we got now is a nice open profit. It's a 14% rise from here. Okay, I think it'd go another 30%, up to 10. Okay, reason I think that is this pair. You had a currency crisis in Turkey. That means basically central bank have run out of money to defend the currency. Okay, and you got money flowing out of Turkey, so that will just keep the USD on the move to the upside, in our view. Minor pair. I posted a video on this, or 2 videos on YouTube, since we got interested in it, and several posts on the Facebook group and page. It is my favourite position. Only a small trade in it though. That's all you need in the exotics. Hopefully more strength ahead. Where are we going next? Right, NZD, USD. NZD for us, commodity currency. It's going down with commodity prices, and I think it's now confirmed a trend reversal. You can see what happens. We go to new daily highs at the time here. Rejection, double bottom. Okay, go back to test resistance, big red rejection, test of the bottom of the channel or the range, and then we break out. We will add to our position. We've got one in early. Added another one in, and I think we're going down to 60. Now, before the range broke, I stopped behind the top of the range, and I want to close below the bottom of the range, which I think I'm going to get, so I can bring the stop down. Just be behind that red tail there and behind that body there, looking for a run down to 60. Okay, so we'll see if this one continues the downside. Last pair, and this is what I'm really interested in, have been for a few weeks. I did a video on YouTube saying I thought the dollar would rise strongly. Dollar kind of went up a bit and just did nothing. Okay, tight sideways range. But the reason I like this pair so much is because when we're traveling sideways here, the volatility drops down. We know speculators are heavily short. And you look at the media, financial media, analysts, economists, broker reports, bank reports, the vast majority of them saying the dollar will continue down to 8, okay, or 8.30, a big way to the downside. But the dollar's not falling. It tightens up the range, the volatility drops. That's a warning of a big move. We do break up on the blue. Blue follows through. Little blue this morning. No, it's late. Was it late morning? Yeah, late morning. I updated this chart. Now, in terms of, I just had a coffee break a minute ago. I just want to see what the USD SEK was up to now, and that little blue has become a big blue. And the US dollar, I did my charts obviously a few hours ago, is moving higher, just generally. Okay, and one thing you want to keep your eye on in terms of trading the US dollar at the moment is keep your eye on stock markets, because if they go down, the USD will go up. And you can see we've got a decent red candle down today, and we could take out this tail. I personally think if we could get through 3,200, we'd gravitate straight down to 3,000. That would really strengthen the USD. I don't think the S&P's got limited upside, maybe get to 300-400, but that wouldn't hurt the USD too much. All the risks are to the downside. Market's got a bit more nervous, a bit more risk averse. That really favours the USD. So a good few pairs to look at in terms of trading big trends. Okay, your stop is as important as your entry, so think carefully about where you put it and make sure it's outside of the noise or not in an obvious place. Always run multiple positions so you can take money off the table, and learn to judge sentiment, because in terms of catching a big move, you've got to have a logical way of setting a target. You cannot do that technically. Use sentiment. Okay, a lot of people say just follow price action. It's very difficult, okay, because all the big trends look obvious in hindsight. When you're in them, following them technically, and you don't know the sentiment behind the charts, you're bound to want to snatch a profit on a minor retracement or move your stop too close. The sentiment analysis is not difficult to do. It's what all professional traders do. Basically, all the top fund managers in the world look at the sentiment towards the fundamentals. They do not trade purely technically. We have to do the same. A lot of people think it's difficult. It is not. It's easy to learn. Just need a little bit of practice. Right, is that all I need to cover in the video today? Yep, that is it. Thank you very much for watching me. Take care. Have a good day.